Hey guys, James here with Waterford Business Solutions. In working with employees, there's a lot of different factors that you have to take into account. We've got payroll, we've got taxes, we've got insurance, we've got write-ups and everything else. But one thing that so many companies overlook and so many companies don't think about is the potential for employee loans or advances. And we see a big misunderstanding with potential clients and clients on what employee loans and advances really are. So we wanted to take some time this week to talk about exactly what employee loans and advances are, how we need to put them on the books, and what we need to do from there on your payroll system to properly record everything. It's important to remember with employee loans and advances, you aren't spending money here. It's not an expense. It's not something going to wages. It's not something going to any type of expense account, because a loan or an advance means exactly that. You are loaning them money, or you are advancing them money that they will eventually pay back. Now, theoretically, if we're using correct terminology, an advance is a 0% loan. You're giving them that money. They're going to pay it back on the next paycheck, maybe the next 2 paychecks. A loan is going to be a more long-term item. It's going to last a little bit longer there. It's going to exist a little bit longer there. And it's going to be something that we see maybe over the course of 2-3 months, maybe 6 months there. Now, when we're talking advances, loans, anything like that, we do want to make sure you as the employer are protected. While we want to make sure that you're helping your employees out, especially if they're going through a rough patch or they need just a little something, we also want to protect you and protect your funds. Keep in mind, if you're giving them this advance, you're giving them this loan, you're giving them money just like any other lender would, with the anticipation and hope, to be honest, that they pay you back. So you need to make sure that you've got a solid plan in action there when you're giving these loans and advances on the minimum payments, the term, when it's expected to be paid back, etc., etc. It is going to be a big factor there that we want to make sure is all in crystal clear writing before you give out any of that money there. Because if the employee was to leave your employee early, if the employee was to object to something, or if the employee was to fall on hard times, we want it crystal clear on what the anticipation or what the agreement was at the beginning of everything here. So that is super, super, super vital. Let's start by making sure that all of that is taken care of. Now, from there, an advance is a loan. A loan is a loan. You as ABC LLC, you as your company, are providing this loan. You are providing this to somebody else. It's just like if you were to take a loan from your business and use it to start up another business. What you're doing is you're creating an asset for your company, and that asset is going to be paid back over time because, again, it's a loan, it's an advance, it's going to come out of their paycheck, so it's not going to be a long-term asset. In theory, it's only going to be a short-term asset because it's only going to be a few weeks, maybe a few months, depending on how you set all this up. But it is going to be an asset for the company. So when you give that loan, we want to make sure that we create on your chart of accounts a new general ledger or a new COA account for employee advances or employee loans. And maybe even more specifically, go ahead and name the specific employee loan if you've got the space in your ledger to do that. We're going to create that And the payment that the check, the ACH, the EFT, whatever it is that you pay that employee, we're going to go ahead and put to that asset account, because that is now the basis of the money that you are owed back from the employee. In your payroll system, and it's really going to vary depending on your payroll system, but no matter what payroll system, you're then going to want to add a new deduction. Now, this is going to be a post-tax deduction because they've got to be charged taxes on this. So make sure you set it up like that. And going to that agreement letter that you set up with how much you're going to be taking out per paycheck, etc., that's going to be what we go ahead and put in as that deduction on the employee. Now, if we've got your payroll system integrated with QuickBooks or with your accounting platform, we're going to want to make sure that that new deduction is mapped to come out of that new or existing, if you've done this before, employee advance / loan account, so that it reduces that loan there for you. No matter what payroll system you're using, if you were giving employee loans and you're charging an interest rate on that loan, the deduction you're taking for that loan there is going to be greater than the principal that you originally gave to the employee. Pretty much no matter the payroll system, I personally don't know of a payroll system out there that will break out a deduction into two different categories. So you will want to make sure, at least at the end of the year, if not at the end of each month, that you go ahead and correct that asset account and remove out whatever interest the employee had paid from that asset account and record it as other income to the company there. That is a vital step that we want to go ahead and make sure is done. I do want to take a moment, and in QuickBooks, using QuickBooks and QuickBooks Payroll, I want to give you a little bit of an idea of how this is going to look here. So join me real quick over in QuickBooks. Okay, so here I am in my chart of accounts here in QuickBooks or General Ledger. And what I'm going to want to do, if I'm creating a new employee loan or employee advanced account, I'm going to want to come up here and click New. From New, I'm going to go ahead and name this on, say, Employee Loans. I may even go as far as to saying John Doe, so that I know specifically who this is for. And then we're going to go ahead and create a other current asset account here. Under that, you'll see employee cash advances as an option here, or loans to others. If you're doing a cash advance, again, cash advance should be something paid back really within 1 to 4 paychecks. If you're doing something longer, we may want to come down here and choose loans to others. But both of these are asset accounts. We're going to go ahead and create this employee cash advance account. We'll see it pop up here on our chart of accounts or general ledger. And then I will go into our bank account and record the fact that we reduced our bank account balance here by giving John a $1,000 cash advance. Whether I do that manually, whether I do that with the bank feed, I'm going to go ahead and just do it kind of manually real quick, just so that you can see that and that we've got it recorded here. So we're just going to go ahead and put in John Doe. If he was actually an employee, he'd show up there already, so not a big thing. I'm going to go ahead and choose my checking account. Say that we gave him a check. Category here, I'm going to find that employee loans for John Doe and put in that $1,000. What that'll go ahead and do for us is record the fact that we now have a asset of $1,000 that John owes us, and we reduced our bank balance by $1,000. Now what I want to do is go over to our payroll system and add a new deduction for John there. Okay, so I've gone ahead and pulled up John or Jesse, as it may be here, their account and everything so that I can put everything in. I'm going to scroll all the way down here to deductions and contributions. I'm going to hit start, and from there I'm going to add a new deduction. We're going to go through here and create a new deduction for this employee, and it's going to be an other deduction. You're not going to see advance or anything like that here. We're going to want to go ahead and choose either other deduction, and then down here choose either cash advance or a loan. Honestly, they're both pretty much exactly the same. I could click on both of these and they are the exact same thing. So you can use either one. What really matters, it doesn't change any type of tax or anything else there. The only thing that really changes here is going to be Intuit's description of everything. So you can choose either one. We're going to go ahead and put in the description. I'm just going to go ahead and put in that, and then I'm going to put in what we're going to go ahead and take. Again, that's why we want to have that pre-agreed upon agreement in place. Are we taking a flat $250 a paycheck? Are we taking 50% of the gross pay here? Are we taking 10%? Is it $1 per hour? What is it that we're kind of taking here based off of that agreement? I'm going to say, well, I want it paid back in 2 weeks, or 4 weeks, 4 pay periods. So I'm going to take $250 per paycheck out and do an annual maximum of $1,000 there. And then save this. What this will go ahead and do is start on the next paycheck drawing $250 out to pay back that loan. Now, it is important to remember at either the end of this loan payback or the first week of January every year before you run a paycheck for the beginning of the year, that you check, at least in QuickBooks Online in their payroll system, you check and make sure that any of these that are no longer due are deleted, because you'll notice here that it only allows you an annual maximum. That means come January 1st of 2025 for us, or January 1st of 2026 or 27, or so on and so forth, this is going to reset back and start charging them $250 a paycheck until they hit $1,000 again. So we want to make sure at the beginning of each year we go through, make sure any of these garnishments, any of these advances, deductions that we've set up that are short-term items get corrected before we run that initial paycheck. So I put that in. We're going to save this. Then what we're going to want to do is come up here to our gear icon and go to our payroll settings. Give me 1 second to get there. Here in our payroll settings, all the way down at the bottom, we're going to want to choose how payroll transactions are mapped, or the accounting situation here. We're going to click that little pin, and then we're going to go down here and we're going to look for this cash advance all the way down here at the bottom, and we're going to want to go ahead and modify that to that loan account that we set up. Sometimes it's not going to show here, and that's going to be when we have to do some journal entries or a little bit of funky mapping of some stuff there. It gets a little hard to show you from here how that works, but it's easy enough. Thank you so much for joining us today. I hope that this was vital and that you can get a lot of information and have a much better understanding on how you should be handling employee advances and loans for your small business. If you found this video useful, please go ahead and like, comment, and share. It really helps this video to reach more people and help more people out there. I also invite you to go ahead and subscribe to our channel and turn on notifications to get videos in future just like this that are designed to help you better understand and grow your business. If you need help or you fear that there's something going on in your business that you don't understand, please don't hesitate to reach out to us here at Waterford Business Solutions by giving us a call at 864-351-0852, or shooting us an email at info@waterfordbusiness.com. Until next time, have a wonderful rest of your day.